Hello, everyone. Welcome to today's financial news. The new week on Wall Street started off cautiously, with U.S. stock futures only slightly fluctuating after last week's spectacular breakout. The Dow Jones, S&P 500, and NASDAQ 100 all fell around 0.1%, reflecting investor sentiment, waiting for more signals from the macroeconomy. The main reason for the market's explosion on Friday was Fed Chairman Jerome Powell's remarks that the labor market is showing signs of weakness, which could be a reason for the Fed to consider cutting interest rates as early as September. Investors now see an 85% chance of a rate cut, up from 75% last week. Some major banks even think the Fed could cut rates twice this year, in September and December, each time by 0.25 percentage points. Looking back at the week, the Dow Jones Industrial Average rose 1.5% to close at a record high. The S&P 500 gained 0.3%, while the NASDAQ fell 0.6% for the week, despite a strong bounce on Friday. This reflects the divergence in technology stocks, where investors remain concerned about the risk of an artificial intelligence bubble. This week, all eyes are on important economic data. The August jobs report and core inflation will be key to determining whether the Fed will actually cut interest rates at its next meeting. In addition, the earnings report from NVIDIA, the company known as the Heart of I, will be released midweek and promises to have a strong impact on the entire market. In addition to NVIDIA, many retailers such as Gap, Ulta Beauty Williams, Sonoma, and Petco will also report, giving investors a clearer view of the purchasing power of American consumers. So in the current context, what should investors pay attention to? First, it is necessary to closely monitor the Fed's interest rate movements because this is a key factor governing global capital flows. Second, it is advisable to diversify the investment portfolio, not to bet too much on technology stocks, especially when the risk of an AI bubble still exists. Third, for long-term investors, gradually accumulating stable blue-chip stocks, or ETFs, will be a safe choice, especially when the market is fluctuating strongly, according to Macro News. In short, the U.S. stock market is entering a sensitive period, with both hope from monetary policy and pressure from economic data and corporate earnings reports. This is a time to be patient and down-pointing arrow, cautious in investing. Thank you for watching. If you find the newsletter useful, please like, share, and subscribe to the channel so you don't miss the latest updates on finance and investment.